Well, welcome back to Finance Uncut. On today's episode, Goldman Sachs says buy gold with $2,500 price target. So before we get to Goldman Sachs, let's just have a look at some recent news of India's precious metals holdings. So India imported 2,600 tonnes or 84 million ounces of silver during the last 4 months of 2021. And according to weekly data from the Reserve Bank of India, it bought 3.7 tonnes of gold in December, taking gold reserves to 754.1 tonnes. Net gold purchases for 2021 as a whole totaled 77.5 tonnes, the highest annual total since 2009. And also coming in from India, breaking news, India to launch its own digital currency in 2022-2023. This is quite disappointing. India's central bank will issue a digital rupee in the 2022-2023 financial year, which begins April 1. India's finance minister, Sitharaman, said the introduction of the digital rupee would be based on blockchain and other technologies. India would be one of the world's largest economies to introduce a so-called central bank digital currency if it sticks to its plans, following in the footsteps of China, which is testing a digital yuan. And this is an even bigger reason to go and get physical metals, to have analog wealth in this digital age that we're moving. That's just my opinion. Anyway, let's have a look at Goldman Sachs. Buy Bitcoin. No, wait. Buy gold. The defensive real asset. Banks tip on protecting against inflation. Goldman Sachs is telling investors to buy gold to protect their money from soaring inflation and interest rates. Just weeks after tipping the far riskier Bitcoin, analysts at the Wall Street Bank have sent out a note telling clients, gold, time to buy the defensive real asset. The precious metal is regarded as a way to preserve wealth when rising inflation erodes the value of cash. So Goldman Sachs long gold sees prices rising to $2,150. Even after a dismal 2021, Goldman Sachs is not ready to give up on gold as the investment banking giant is raising its price forecast and recommending a long gold trade for the year. In a report published Thursday, the bank said that it is raising its 12-month price forecast to $2,150 an ounce, up from its previous target of $2,000. The bank also recommends buying December 2022 gold futures. The new bullish outlook comes after a disappointing 2021 for gold as prices ended the year down nearly 4%. Goldman said the decline in gold last year made sense in the environment, strong economic activity, and expectations that rising inflation would only be temporary. Crucially, high growth and seemingly stable prices led to a surge across all risk-on assets, in particular cryptocurrencies. And I agree with that. Crypto is a risk on. It's not gold. Bitcoin is not gold. It's not digital gold. It's not gold. It is a risk on asset, and it correlates a lot better with risk on assets than risk off assets. As a result, not only did gold face falling investment demand from investors no longer looking for a debasement hedge, it faced direct competition in Bitcoin as a store of value. Yeah, disagree. The analyst said in the report, on top of waning investor interest, the divergence in global growth expectations helped support the dollar beyond our expectations. However, looking to the new year, Goldman said they expect most of the trend from last year to reverse. Today, the global growth inflation mix is markedly different. While there is not yet talk of a recession, our economists forecast a material deceleration in US growth, while the imminent prospect of a new hiking cycle is leading to a risk-off environment across long-duration asset classes, the analysts said, I guess. For investors looking for a way to hedge their portfolios from risks of a growth slowdown and falling valuations, we believe a long gold position would be more effective in the current macro environment. Oh, sounds like they're talking about stagflation. The latest gold comments from Goldman Sachs come ahead of the Federal Reserve's January monetary policy meeting. The central bank is expected to prepare markets for a rate hike in March. Contrary to many investors' expectations, gold has remained very resilient during the recent increase in US real rates. In our view, this is due to gold's status as both an inflation hedging and a defensive asset, the analyst said. The analyst noted that the growing risk is that persistently higher inflation will force the Federal Reserve to aggressively tighten its monetary policies, which in turn would further weigh on economic growth. Goldman Sachs already downgraded its US growth projections as the US government is unlikely to push forward with its fiscal stimulus plans. As US growth continues to slow in 2022, the market perception of recession probability could increase further, the analyst said. This sets gold up for greater investor interest despite rising rates. Another factor that Goldman Sachs is watching is the growing inflation threat. Last year, inflation fears were kept relatively in check as the US central bank saw rising consumer prices as transitory. And what have I been saying on this channel? It's not. I mean, under the definition, yes, everything's transitory, meaning not permanent. But the way central bankers were saying was, this is going to come back down and, we're going to have deflation again. I said, no. However, the investment bank said there is now a risk that inflation expectations become unhinged as inflation has been more persistent than expected. Hello, did you not watch this channel? We estimated that if inflation were to structurally move to 4%, yeah, you'll hope it's that low, gold could hit $2,500 an ounce based on the historical gold-inflation relationship. We also estimated that gold would get somewhere close to this level if US gold ETFs would move back to their 2011 highs. Therefore, we think there is considerable upside potential in gold in a scenario where inflation increases significantly, the analyst said. So there we have it. There's Goldman Sachs. So 2150 or 2,500 if inflation is structurally around that 4% mark. Well, lock that one in, Eddie. Lock that one in. So maybe Goldman Sachs does watch this channel. Once again, I did this video before Christmas in 2021 where I gave my predictions for 2022. And what was my prediction for 2022 for gold? As you can see in red, I said gold would be between 2,200 and 2,500. And that's based on all the macro factors that I'm seeing. Now, if Goldman are saying that it might hit 2.5 grand, maybe I should up that to 3,000, my target. Because I think where whatever Goldman says it's going to be higher than that. And what about silver? Well, my targets for silver this year is 30, then 40. So anyway, what do you guys think? Are you following Goldman Sachs' advice? Are you buying gold? Are you buying silver? Are you buying both? India with their central bank digital currencies. I've done videos where the Australian government and the Reserve Bank of Australia has said we're going down the route of central bank digital currencies. The Fed are doing it. The ECB are doing it. Everybody's doing it. That's where things are going. And in my opinion, that's where you want analog wealth, not digital wealth. And analog is physical gold and silver. But anyway, that's just my opinion. What do you guys think? Love to see your thoughts and opinions in the comments below. If you like this video, please hit that like button. Really do appreciate it. Take care, everyone, and I'll see you again on another episode of Finance Uncut.